Hey YouTube, this is Jay Money with Falling Forward Financial. Just a article that I come across here, 2 penny stocks that could make you filthy rich. I've talked about one of these numerous times and really bad-mouthed them a time or two, but I went and slapped my hand for you, so you can leave your comments in the comment, or it's all good. But stocks under $5 a share, aka penny stocks, are rarely worth considering as an investment vehicle. Companies that could occupy this portion of equity price spectrum tend to have major fundamental flaws, poor management teams, and unfavorable competitive positions within the industry. On occasion, however, some of these stocks turn out to be diamonds in the rough. Speaking to this point, several of the best performing equities over the prior 12 months were former penny stocks. So, not that I give tax, legal, or trading advice, just stating my opinion, but we'll figure it out by the article here. So, which low-priced equities might be the next big winners? While it's impossible to accurately predict big price movements within the highly volatile group, they think Sorrento, SRNE, and we'll look at each of these individually, and Sundial is the one I was talking about earlier, are both building a solid foundation for long-term success. And here's a brief overview of the pros and cons of these penny healthcare stocks. So it's kind of interesting they call them healthcare stocks. If we look at SRNE, Sorrento Therapeutics, currently at $2.86. You can see they're down over 76% in the past year. Past 3 months, they're actually up 26%. So that's been a good time to get in on this one. Over the past month, they're down about 29%. Here in the past week, they're green 3.23. So it's just kind of up and down, kind of all over the place. I don't give tax, legal, or trading advice, but if you don't have the stomach for the volatility, I would definitely not be looking at this one. If you don't know much about them, they're in the development and manufacture of biopharmaceutical. Any pharmaceutical stock can be up and down unless you're holding like Pfizer. It doesn't do much. I have Pfizer. I've talked about it numerous times. It focuses on therapies to treat and stage the evolution of cancer from elimination to equilibrium and escape, which include biosimilars, immuno-oncology, antibodies, cellular therapy, cell internalizing. And so this one is founded in 1989. The market cap of $929.5 million. Low or high today of $2.08, low of $1.90. So you got about 18-cent swing there if you wanted to trade this one. 52-week high of $8.88 and a low of $1.15. Average volume at 8.7 million and volume here today at 3.6. Here's a look at their earnings. Next is expected on November 4th. So you can just see they're kind of up and down volatility, just like the stock price. But that's it for Sorrento. Again, they're the epitome of the high-risk, high-reward stock. The company sports a broad product portfolio and clinical pipeline spanning high-value areas such as cancer and pain management. Sorrento's most valuable product candidate, though, is arguably its third-generation tyrosine kinase inhibitor. The drug is presently in the late-stage development for advanced non-small cell lung cancer and the mid-stage development of metastatic castrate-resistant prostate cancer. Both of these indications are multi-billion-dollar annual drug markets. What is the catch? Sorrento is a cash-burning machine. Per its latest 10Q filing, the company lost $219.5 million in the second quarter in 2022. So maybe it's misjudgment. Maybe they're just looking for that specific cure. Research, this type of stuff costs money. It takes money. So what more? Sorrento only had $70.3 million in cash and cash equivalents at the end of the most recent quarter. So again, why it's up and down. So the long and short of the Sonos share price would probably be well north of $5 if the company were better financially footing. So good news is Sorrento ought to be able to overcome the key overhang so long as the continues to hit the mark in the clinic. So next we have Sundial as a diversified MJ play, and like I said, I've talked about this one numerous times here on the channel. I just did a video on them actually yesterday, and one on TLRY today, and always doing videos on MJ stock. So, but you can see with them, they're down over 67% in the past year, 32% in the past month. They're down in the last week 10%, and here's a look at today. They're actually 1.2 in the green. So again, another MJ stock found in 2006, market cap of $597 million, high today of 269, low of 250, 52-week high of 960, and a low of $2.12. Average volume of 4.78 million, and today at 3.46. Here's a look at their earnings. Next is expected on November 10th. But they're a Canadian stock. They've struggled mightily of late. The vast oversupply of MJ in Canada has crushed profit margins within the emerging space. Bottom line is that the industry desperately needs to consolidate in order for any of the companies to consistently turn a profit. Over the past 2 years, Sundial has been steadily building a highly diversified business. Simplified goal in mind. Earlier this year, the Pod Titan completed its acquisition of the largest private sector retailers of alcohol in North America, resulting in a 2,344% increase in net revenue in the most recent quarter. So a lot of these are getting into the retail of alcohol. I've said that for the longest time, that CBD infused drinks are going to be the next biggest thing. I think they're going to be just as popular as Red Bull, Monster, that type of thing someday, so we'll just have to wait and see. Last but certainly not least, Sundial has shored up its long-term financial outlook by zeroing out the debt and increasing in cash, marketable securities, long-term investments to a healthy 900 million Canadian dollars at last count. So not to be totally negative on Sundial, the whole sector's down, but they've been a hyped up stock at times. I have a couple hundred shares still just kind of sitting on them, waiting for it to go up. Have not bought any more of this one lately, but I've been covering it for probably about 2 years. I think I got into it about 2 years ago at the 50 to 60 cent range, and so I'll just have to wait and see what it does in the days and weeks to come, and we'll see what it does after the elections coming up here, and see if that has a turnaround, getting closer to legalization of it, everything. So, but that is the 2 penny stocks that could make you filthy rich, and the secret word there, could. Like I said, I don't give tax, legal, or trading advice, just state my opinion, but 2 of them you might want to put on your radar watch list if you haven't already. So, and if there's any other stocks out there you want me to take a look at, I'd be happy to do that. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, following Ford Financial. Happy trading, happy investing, stay green. Cheers.